Hey everyone, and welcome to the Mastering Commercial Real Estate podcast. I'm your host, Cory Mortensen. Today's guest is Savannah Arroyo, and she is a commercial real estate investor and registered nurse. She is an investor and specializes in giving healthcare professionals opportunities to invest in her projects with her companies, Networth Nurse, Invest Health, and Willow Investment Group. And she's been investing since 2020 and has about $15 million in assets under management. Savannah, welcome and thank you so much for being on today.
Yeah, thanks. Love talking real estate, so excited to jump into this.
So, we were talking about it just now before the show started, but tell everybody a little bit more about you, your background, and how you got started in real estate.
Yeah, definitely. So I am first and foremost a registered nurse. I've been a nurse about the last 9 years, and really went out of high school right into college pursuing my nursing degree. Worked in a few different specialties and loved process improvement, operations, and leadership. So, really, right after school, went back to get my master's degree in nursing leadership and administration with the goals of climbing the corporate ladder and one day becoming a chief nursing officer. And so, was doing that throughout my last 9 years in the nursing space. And beginning of 2020, after having my second daughter, my priorities really started to shift. And my husband and I, after now having two little ones, we were both working very demanding jobs Monday through Friday, 9 to 5. And just after having kids, we were looking at our lifestyle and really wanted to be more included in it, every minute of it. And so our full time jobs didn't really allow us that freedom. And so we started looking for different ways that we can invest our money or start building wealth outside of the 9 to 5 game so that we could kind of create the life that we wanted. And so started looking at anything and everything, didn't have any background or family and friends network doing this. And so started watching YouTube, listening to podcasts, and stumbled upon real estate investing and started learning all about it and got started in long-term rentals, build to rent projects. And then after that, we moved pretty quickly into multifamily syndications, which is what we do now.
So, moving from, because those were single family style investments when you got started, right?
Yep.
When did you make the leap from single family to multifamily, and what kind of gave you the confidence and the vision to do that?
Yeah, so we wanted to get started investing in real estate, but didn't really have any money to start investing. And so took kind of having some conversations with good lenders and realizing that we had over $100,000 worth of equity in our home. We didn't even know what the terms equity and appreciation were at that time, but realized that we had bought a home in Los Angeles, California in 2016. And within a few years, it had appreciated well over $100,000. And so we were able to tap into that through a second mortgage to purchase our first single family homes across the country. They were build to rent projects, cash flowing a couple $100 a month. And after we did those deals, used all our capital to buy them, we're like, okay, what's next? How can we buy more real estate? And started learning about syndications and pooling together different resources. By then, we had a couple friends and family members knowing that we were getting into real estate investing and were kind of interested and wondering if there were ways that we could partner together to maybe do a bigger deal. And we didn't even know this at the time, but that's essentially what real estate syndications are, is people pooling together their resources, whether capital or different skill sets that they can bring to the team and taking down these deals. And so started learning about syndications and what it took to build a team and have been doing that ever since.
So let's talk about that first deal. Let's just go right into it, into the nuts and bolts. What was that first deal? What was the deal size? When was that deal that you guys took down? Let's dive into that.
Yeah, so it was two single family homes over in Atlanta, Georgia. So we were based in Los Angeles, California. Initially, when we went into real estate investing, we were sold on the BRRRR method because for us, we didn't really have any capital. We had a very fixed small amount of capital that we planned to kind of snowball. And through the BRRRR method, which most people in real estate are familiar with, you're buying a property really undervalue, renovating it, repairing it, pushing appreciation into it, value add, and then renting it out, refinancing to essentially pull all out that capital and appreciation that you push into the deal so that you can go out and buy more. Repeat is the last R. And so you're really kind of building a portfolio that way. And so for us, that seemed great. We were learning all about it. And so based in Los Angeles, California, we were looking across the country just for price point reasons. And we loved that market. And so we were looking at deals over in Atlanta, Georgia that we were potentially going to BRRRR. And at that time, we had two kids under two. I was working in management. It was during COVID. My husband has a demanding job, and just overseeing a renovation across the country seemed a little daunting to us, and something of like, all right, you hear the horror stories, and we didn't want our first experience in real estate investing to be such a bad burn that we didn't get back into it. And so we ended up buying build to rent projects, and they were cash flowing a couple $100 a month. And we're like, okay, we want to get in it now. Like, this is a great way to kind of get it and start, at least getting some experience and exposure to it. And ultimately, with those long-term rentals, so that second mortgage we pulled out, it was $80,000. We've used it as a down payment on 2 homes over there. They were each $177,000. So we put like $40,000 per each of them for a down payment. And then I think we got 15% down on those with the Wells Fargo loan at the time. And they were cash flowing a couple $100 a month. And then one of them had a pretty big turn at 9 months. They were brand new build townhomes, and had to repaint the whole place, and it completely depleted our cash flow. And so that was a really eye-opening experience into just how long-term rentals work. And then at that point, we started researching and learning heavily about multifamily and the ways that you can mitigate a lot of that risk by scaling.
Right. So tell us about the first commercial, the apartment deal that you guys took down, and what that one looked like.
Yeah, so we did those 2 single family homes, wanted to move into multifamily syndication. And so for us, we went through a pretty extensive coaching program for that. We put up the $30,000 bill to do something like that, which was more than my master's degree in nursing. But for us, we were really sold on, we were going to be building a business out of this. We were going to be raising capital from friends, family, nurses, doctors I worked with. And so we wanted to make sure that we were doing it the right way, and working with a team who has decades of experience, not only acquiring multifamily and commercial assets, but overseeing them, raising investor money, dealing with the legalities of everything. And so we wanted to learn that from people who are doing it. And so invested heavily in a coaching program. And then the first deal that we did was a 12 unit up in Oregon. It was $1 million. The capital needed to close was $350,000. We were only able to raise $250,000 because we do not have, well, at that time did not have a network of individuals who could throw $50,000 at a real estate deal. We were just in our late 20s, didn't have that network of people around us. And so raised 250, it forced us to put another $100,000 in the deal. And so during that time, it was COVID. So under the CARES Act, we were able to liquidate some of our retirement money penalty free to put in that deal. So we kind of skated by and made that deal work, and then have since scaled our portfolio up to, we have 5 apartment complexes now. We have a storage facility. I've raised over $4.5 million from mostly healthcare professionals. So really starting getting after it after that first deal.
That's awesome. And so has that deal gone full cycle yet? Are you guys still in that deal? Was it a value add?
Yeah, so it was a strong value add deal. So that was, the rents were, I believe, 29% below market. There was also advertised that there was this opportunity to turn this storage space into a studio unit, which is a little bit of one of my horror stories into the space. We hired an engineering team. We were in this coaching program. We were vetting out whether or not we were able to do this. The broker was telling us we could do it. We were underwriting all of our numbers based on the fact that we could turn this storage space into a studio unit. We had engineers draw out plans for us. Then we close on the building, and they go to pull permits from the city, and we could not add an additional dwelling unit to the house. And so that was a big learning curve for us, and big in a sense of there's stuff that goes wrong in real estate all the time, especially when you're taking down deals. And my husband and I, it really brought us together in a sense of like, okay, you can't spend any time pointing fingers, what went wrong type thing. It's like, how do we overcome it? How can we do right by our investors? Like, how do we continue to push forward in this deal? And so that was a big learning experience. But that deal we did November 2020, it was a 3-year hold anticipated for. So we're coming up onto the 3 years with it. And we actually kicked it over to our broker to analyze based on its net operating income, what its value is. And we're over exceeding our investors' expectations, especially because of the way inflation's been over the last couple of years. It's really helped us there.
Yeah, that's awesome. What was the debt that you guys had on that one? Do you remember?
Yeah, so ended up doing a credit union with that one. I want to say it was a 70% loan to value, and the interest rate, I believe, was in the low fives at that time. Yeah.
That's awesome. And congrats on pulling off a amazing first investment. I know that's a daunting challenge for anybody on their first deal. So congratulations to you on that one. And since then, you've taken down quite a few more deals on that. You said you raised about 4 million in capital. Let's turn to the capital raising side of
Mhm.
things. What has your experience been with raising capital? I know you mentioned on that first deal it was kind of a tight network and a tough raise. How has it been since that first deal raising capital? What's kind of your bread and butter, your tips and tricks?
Yeah, so the capital raising aspect of real estate investing was honestly something that deterred us a lot from doing syndications to begin with because we don't really like the salesy almost aspect of it. For me, being in the healthcare industry and in the management positions, I would always dodge it when my pharmaceutical reps would come through the door, like, oh God, they're trying to sell me something again. And so when we were initially going out into this space, knowing that we would be basically selling these investments to investors, it was a big mindset change in how can we do this in the most genuine way possible? Like, how can we do this so it fits with our true values and our mission? And for me, it's always been to provide alternative investing opportunities to healthcare professionals. Like I said, I was working in management throughout the COVID pandemic, and I was in a position when we were shutting down all our surgery centers where I had a layoff of all my staff and didn't know if they were going to get subsidized from the government, didn't know if they were going to have any income coming in. And it literally opened my office door to hundreds of conversations with nurses and doctors and other healthcare professionals. And I couldn't believe how little they knew about investing, how little they were doing for investing. I mean, they didn't really know anything about basic finances. And it was so disheartening for me to see people who were saving lives throughout the whole COVID pandemic be in a position where they were living paycheck to paycheck. You know, travel nurses making $200,000, not knowing how to spend their money and in massive amounts of debt. And so for me, it's always been about pushing the mission of financial wellness for healthcare professionals. And so when I went out capital raising, I'm like, how can I do this in the most genuine way possible? And that led to the launch of Networth Nurse. And so really that's the platform that I have on social media where I'm just sharing my story. For me, moving into real estate investing, it took listening to hundreds of podcasts and listening to other people share their story to get motivation. And so I'm very passionate about doing that and instilling any sort of motivation and hope and inspiration into healthcare professionals to learn more about real estate investing. And so a lot of what I do for capital raising is social media engagement, building a community and a network around that. Because, like I said, when we did that first raise, kicking out an email to our circle of friends and family was kind of crickets. People didn't have the capital to invest. And so since then, I've really been big on building a social media presence.
So let's dive into that because that is something that a lot of investors tend to shy away from, maybe because they don't think it's going to get them any type of leads or any investors. But then there's another side of the coin where that's solely what they focus on.
Mhm.
And we do a good mixture of all of it, and we're always looking to improve. But what is something that you found success in with either the type, is it the copy, is it the actual networks that you're putting in? Is it Instagram, TikTok, LinkedIn? Go more into detail about that.
Yeah, definitely. I have tried so many different things. I feel like I could go on and on for hours just about all the things I have attempted and failed and tried and been successful at. But for me, early into the space, I sharing my brand Networth Nurse, thinking how can I do this on the biggest scale possible. I was still working full time, had my two babies. Um, Podcasts were what I use, and so I'm like, how can I spread my message through podcasts? And so when I launched my brand Networth Nurse, I made a goal to be on 100 podcasts in a year. And through that, I had no idea how valuable that would be at the time. But I was doing it almost in a lazy way of like, okay, I'll hop on other people's podcasts. I don't have to schedule anything too much. They're coordinating all that. They're editing the video. They're uploading it, and they're giving me all the marketing material. And I'm just posting it to my social media. You know, I'm like, I was so busy at the time that I was like, okay, this is like kind of the easiest way to get my message out there. And so started guesting on other people's podcasts, and I started connecting with amazing meeting leaders in the space, people like yourself who are doing really great things for capital raising and in commercial real estate. That was a huge benefit to that. Also, the marketing aspect of all these other hosts. I would have people scheduling calls with me, or they're like, man, I hop on my LinkedIn and I see you're on like 4 different podcasts in a day, because they would be busting out like 3 or 4 a week. And so I'd have the marketing material and people would be like, man, I'm hearing you on every podcast I'm listening to. And so for me, that was a huge way of building my community. I can't tell you how many connections that has opened up in my space. And then the second thing I would say I did that was very beneficial was during the COVID pandemic, when everyone was on their phone, reels were taking off on Instagram. And I cringed at the fact of doing the dancey, pointy things, whatever. And I made a vow to do 30 in 30 days. And I grew 4,000 followers within that month just by committing to something like that. And for me, I found it was like most of the time things being in my scrubs that other healthcare professionals could see and relate to. And in the capital raising space, it's all about trust. It is a complete trust game. How you are getting other people to invest with you is they trust you with their money. And so for me, I have found that with healthcare professionals, because I know their pains and struggles working in the healthcare space, that there's kind of that built-in rapport already. And it has been very valuable as I raise capital.
Yeah, and I totally empathize with the making the reels and not wanting to do all of that at the first go around. But it
Cringe.
does pay off a ton, because when we first started that, we started our Instagram, we're really big on our brand of being a thought leader and an educational platform and making things accessible for other people to learn and join in. And it's especially true for the investors who just want to invest with you, because so often they want to get into real estate. They know a little bit about real estate. Maybe they bought a house or something like that. But the whole point they're investing with you is because they don't know the nuts and bolts. They don't know everything about real estate, especially commercial real estate. And so education is so important for the investor and for everybody. And we put out a bunch of terms and educational materials in our social media and reels. And we've been getting people reaching out to us. I've had people come through to either schedule a podcast or talk about investing with us just from a handful of our very first reel posts. It's crazy how some of those just get going and take off, and what building a social media platform for commercial real estate syndicating does for you and getting traction. And so of all of them, what is your favorite? I know you said awesome goals for yourself, but what is your favorite? What do you like to do of all of them? Is there a marketing that you prefer?
I would say Instagram and emails. I feel like that's the way. Instagram is the way that you can connect quickest with people, I would say. I think by getting in front of the camera and talking about real estate terms and what you're doing, people feel like they can get to know you quicker. And that's honestly, I think the biggest way to close that gap of getting investors to invest with you is them getting to know you. And you can do that a lot quicker over Instagram just by coming on the camera and talking about terms.
Absolutely. So when you're doing your capital raising and you're meeting with these investors and talking about the deals that you're doing, how do those conversations go? What are some of the questions that they most commonly ask you? How do you handle objections? What is your process when you start really getting into it and asking for money for deals that you're doing?
Yes, I have done hundreds of investor calls, tons and tons. I attract a lot of healthcare professionals and a lot of women. I have a fair amount of people who get on the calls with me who are very unfamiliar with real estate investing. So it's that education piece. And so for me, I realized early on into the capital raising game that I would get the same questions over and over. What is average annualized return, and how do you compare that to the stock market? What does that mean? What's ROI and real estate return on investment? And I love how you even mentioned the terms, because I always tell healthcare professionals, if you have learned the healthcare language and medical terminology, you can learn financial terminology and investing terms. And that is really the biggest barrier to people really understanding and investing, is they don't understand the terms. And people feel almost this embarrassment and shame to acknowledge that or even say that, because but we were never grown up. I mean, the majority of people didn't grow up in schooling or communities where people were openly talking about this. Money still has a very taboo realm around it of people feeling like they can't talk about it. And so there is this stigma that I feel like I have to kind of overcome with some people when I'm getting on the phone with them, of being very open of like, what are you currently investing in? What does your net worth look like? You know, some people are almost a little hesitant to share that. But for me, hopping on a call with them to determine whether or not one of our real estate investments is going to be right for them, it is really understanding all that information about them. And like I said, you would be shocked at how many people I would talk to who have never set up a budget, you know, nurses who are making very good money, who have never set up a budget because they don't want to look at where they're spending it. They don't want to see where it's going. And that is why they're not gaining more control over their finances. And so it's a huge education piece. But as I started having those conversations and getting those same questions, I just started creating content. So on my website now, I have tons of blogs and downloads where it's like real estate returns explained. I have a doodle video on my website that's 3 minutes that literally explains logistically what a syndication looks like. Because most people are like, what is a syndication? How does it work? And I created this doodle video within a couple minutes and it draws it all out. People love that. And then just different videos that I have on YouTube. I have a Facebook group where I bring experts on every month and we talk about different things in real estate investing, whether it's companies or deal deep dives. So just continuing to be exactly like you said, like a thought leader in the space has been big.
Yeah, that's funny that you say when you mentioned that you're a syndicator, and because I've done that, and it's, oh yeah, what do you do? Oh, I'm a syndicator, and it's blank expression, and I flip apartments.
Yeah, exactly. Yep. You got to
Like,
know your audience, who you're talking to. Uh-huh.
Yeah, and so on the note of where you guys are getting your deal, and actually I wanted to ask you a question. If you weren't so niched and attached to the medical community, which is, and you've done a great job of building a brand on that, and congratulations to you on that. But if you didn't have that attachment and you didn't have that experience in there and you were more generalized, what would you be doing in order to attract investors, attract money to these investments if you didn't have that community?
Yeah, I mean, look into your life. If you don't have something like nursing and healthcare, look at what networks and niches that you do have in your community. If I didn't have that right now, I am a mom. I have 2 young kids. I'm in daycare with a lot of people who have potentially money to invest. I'm at a lot of birthday parties with them, you know, once a week on weekends. And so I'm starting to have more conversations about that with just the network. My husband and I just relocated from Southern California up to Northern California, and we moved to a neighborhood with a very nice country club and community. And we're thinking of joining just so we can really have access to the pool for summer for our kids. But we're like, not only that, but hanging out at the restaurant and bar at this place, like at the pool, is just surrounding yourself with different people who are talking business and who want to invest. Going more to investors who have that readiness is helpful as well.
Gotcha. So when you are finding deals, when it comes
Mhm.
to marketing, deal sourcing, what do you do? Is it direct to seller? Do you mostly work with brokers? Tell us more about how you find your deals.
Yeah. Okay. I'm going to go one step back and tell you a little bit how we kind of have our business split up. So my husband and I went through that coaching program. We did that first deal side by side, learning everything together. We were on calls with brokers together, the lenders, investors, legal, everything. And then after we did that first deal, we kind of split up the business. So my husband does all of our asset management and acquisitions and asset management. So he's out finding the deal, getting the financing for it, taking it down, and then also managing the investment throughout the lifetime of it. And then I do more investor relations and capital raising and all of the marketing. So how we're finding deals, we have great relationships with a broker. Actually, the broker that got us that first deal, that 12 unit, we've since done 4 more apartment complex deals with him and his team. They're Marcus and Millichap brokers. And we've gotten deals in tertiary markets up in Oregon with a very strong working class, very low vacancy, very low home ownership. And so everyone over there is renting and the inventories are low. And so we've hit a really good sweet spot of where we're able to achieve really great returns for our investors. And so we've done that first deal with that broker, and he's since got us those the other 4 cents. And then the storage deal that we are general partners on, that was just through a partnership that we've met through community.
Gotcha. And so we've got a wide range of people that listen to the podcast, all the way from totally beginning day one investors who want to get into the space and people who are very experienced. For the people that are just starting out, what does a broker call look like, sound like? What kind of questions are they asking? What kind of questions are you asking? How should somebody expect a broker call to go?
Yeah, so this was very hard moving into the commercial space because these brokers are doing big deals and it takes a lot to get these deals done. They're a lot different than single family homes. There's a lot of moving pieces, especially with the financing, which I'm sure, Cory could go on and on about with your lending background, but there's a lot of hoops you got to jump through with those terms. And so it's a lot harder to take these deals down. And so the brokers really, I mean, there's only so much inventory they get, and they're sending it really to their investors that they know have experience and can get the deal done. And they have lists of their investors who have these criteria. And so it's normal for new investors to not get a lot of attention. And so I talked to maybe 30 different brokers. And for me, I realized as I started having the conversations, immediately they would ask your experience. And when you don't have experience, it's hard for them to take you seriously. And so I would lean on the single family homes. And I would say, I would lead with, we own real estate in Atlanta, Georgia, be a little bit vague about what it was. We own real estate in Atlanta, Georgia. And then at that point, I would get very specific about what we were looking for. And I think the more specific you are, then they think, okay, they kind of know what they're doing. And so when we went up to Oregon, we were like, we're looking for 12 to 20 units, $1 to $1.2 million price range, value add in these submarkets. And when we got on the phones and talked to brokers about that, I think because we were so specific, felt a little bit more confident in sending us deal flow.
Yeah, and for everybody listening, that's a huge thing, because when you're starting out and you don't have any experience, even if you don't have any real estate experience, any investing experience, maybe you don't even own a home or anything, it's important to have something that you can put in front of the broker, talk to the broker about, or have somebody in your group that you can leverage their experience for, and that you're helping with the acquisitions. But the other thing is to be knowledgeable. You have to know what you're talking about. You don't have to know everything, and you can even ask them questions, even tell them I'm not sure what that means, but it is 100% going to help if you can tell them exactly what you're looking for, like you said, as specific as you can be, doing your homework up front, because these people are, especially at Marcus and Millichap, they're a big shop and they do a ton of volume all over the place. So when you're talking to these people, you really have to come prepared with your homework. And if you don't have any experience, don't let that stop you. You just need something that you can grab onto. Because when we were getting started, we didn't have any commercial investment experience, but I had commercial real estate background, and we've got a partner that worked at Bloomberg, and we've got investors already ready to go. Something is going to get you in the door with them. And when you're forming relationships, it's just important to keep that open. You don't want to lie. You can't lie. You can't get caught in a lie or anything, because that's going to destroy your credibility with them and your reputation. They won't talk to you again. So it's important just to come prepared, like you said. When you're talking to lenders, let's talk about that just a little bit, and getting debt quotes and everything. Did you get multiple quotes on your deals, or do you have a good relationship with someone that you just go to?
Yeah, and the lending space is so intimidating moving into it in the commercial space. I can't tell you how many times early into this that I would get on the phone with lenders and they would be throwing out terms, and it literally sounded like a different language was coming out of their mouth. Even now, I see some of the emails that come through and all the terms and necessities and all the stuff they need. It can be very, very dense. But do not let that stop you from having conversations with lenders. And it I mean, just like in all businesses, there are all sorts of people that you can meet. And if you are more learning, tell your story and let them, exactly like you said, let them know your background, where you're coming from, what you want to do. Be clear on your past and where you're going in the future. And it'll open up the conversation to see if they can take you there. If that's a symbiotic relationship, right? If it can be mutually beneficial. Because the more you're open about what you're doing and want to do, then you can see if it aligns. And we have found that there were some lenders that we talked to that were not interested in working with new investors. They were just not interested in explaining it. They weren't interested in diving into the numbers. And we found we would then have conversations with lenders who were all about working with new investors, and they would sit down and have calls with us and dive in the numbers and work with us to create different things. If we didn't have a PFS or a personal financial statement or a SREO, scheduled real estate, like those were things that we didn't even have when we first started, and working with certain lenders who were like, okay, hey, we can get you this. We can sit down and help you work with that. It was just being kind of working through the process and being honest along the way was really helpful for us.
Nice. So let's talk about your team and what all goes into your running your business, because you've got quite a few things going on. Obviously, you've got a few brands, you've got the investments. So what does your team look like? How many people are you partners with, involved with your staff?
Scaling a business is no joke. There is a lot of learning learning curves, I should say. And so scaling has been learning different ways that we can leverage help and delegate. So for me, it comes down to education first and foremost, always learning about different ways, who, not how, the 4-hour work week, all the things to just educate myself on how to own and operate and build a business. So constantly doing that first and foremost. Then I would say bringing on initially building kind of how we scaled it, a graphic designer to help us with different things on social media, building deal decks. I mean, I don't have a lot. I could play on Canva and make some good looking stuff, but I don't have, my graphic designer can make it 10 times prettier than I could even imagine. And she does it in like half the time. So learning how to leverage people like that in your life has been huge. I work with a website developer that I sourced on Fiverr initially, and I've been working with him for a few years, primarily through Slack. And he's built my Networth Nurse website, also my Invest Health website. He helps maintain those. Having him kind of on standby to help with everything has been so big. I also have hired different marketing teams, have crashed and burned with a few different ones on social media, creating content. Didn't feel like it was worth the ROI. Spent a lot of money on that initially, especially when I was working full time and trying to balance how could I spend money for it to grow, and found that spending money up front on marketing wasn't my best source, best way to grow. I found it was better when I was doing it. And so kind of learned a few things that way. I have a VA who works for me full time now, and she helps with all my businesses. So I have Willow Investment Group. That's our investing business that we own and operate all our real estate assets with. And I have my investor relations with there. We do quarterly returns, quarterly disbursement. So having her help me kind of maintain that. And then I have Networth Nurse. So she does a lot of social media management for me. She does calendar management. Helps me with any task items, things that I just know I need to get done in a day, but can't spend an hour doing. I'll just kind of kick it to her, and she brings it back to me, whether it's making different spreadsheets or accumulating data, that type of stuff. She's super helpful. Can't recommend that piece enough, but that's been, and then, like I said, working with my husband as the co-founder for my Willow Investment Group. And then my startup, Invest Health, which is a financial wellness platform for healthcare professionals. I have another nurse, Kai Arnold, and he's my co-founder in that business. And we basically spend a lot of time on the phone, meeting with people, talking to venture capitalists, different startup founders, different teams, and just spend a lot of time strategizing. So yeah.
Well, you've got a full team under you already, and just 3 years on this?
Yeah.
That's
Yes, it's been a
awesome.
wild ride.
Do you have a coach, someone that still helps you out? Like, I know you were talking about you had the coaching program before. Is that where you got a lot of this business savvy from, or where do you kind of take all this from?
Yeah, the mentorship piece that we paid for the commercial real estate coaching originally, I mean, that really was coaching us through the underwriting and the legalities. I can't say that was a lot of the strategizing and motivation and inspiration. We didn't really get that from the coaching program, but we weren't necessarily looking for that from the coaching program. Like a life coach thing, I would love one. Right now, I'm kind of working with he's an entrepreneur coach, Joseph Rodriguez. He makes a lot of subconscious mind training videos on YouTube, and I'm a part of his program and kind of work with him. And he has a lot about just growing as an individual. For me, it's a lot about self care too. And especially after becoming a mom, you realize how important it is to take care of yourself. And really, at that point, getting a meditation in every day, making sure I get a yoga class in, doing a gratitude practice, like those are huge practices in my life that allow me the motivation and drive to build everything I'm building.
So what does your daily routine, your daily schedule look like for keeping everything running? Because you've got so many things. You've leveraged a lot of staff and a lot of people in your business, which is great. So what is up to you? What do you spend your days on working?
Yeah. So I'm still working part-time as a registered nurse. My husband left his full-time job in February and working full-time on real estate. And we made a transition from SoCal to NorCal. And so I was able to pick up a part-time nursing gig up here to hold benefits for my family to get him out of that position. And so I still work twice a week in the hospital, 2 12-hour shifts. And for me, it's good, especially as I'm building my startup, to continue to stay connected to my customer base. I mean, every day I go into work, I hear nurses complain about their finances every day. It also opens conversations with doctors and caregivers about my investment opportunities. So it opens the door for capital raising as well. So I like to have my foot in the door. Plus, I have such a passion behind nursing that it's fun to go in there a couple times a week. But other than that, I spend a lot of time on meetings, really just working with other people about how to kind of progress the business and move it forward, whether with different partnerships in the real estate space, but especially with my startup. I spend a lot of time with that. I'm capital raising right now for a deal. So working with investors and doing a lot of information and marketing and that type of stuff. And then also with the Invest Health, it's more calls and meetings.
Gotcha. And so when you're going into these meetings, what is kind of the conversation starter that you
Mhm.
have with these doctors, these people that you want to come in and bring money into your company? And then what is it that you were discussing with them in those meetings?
Yeah, so I love to dive into them kind of with an opener of getting to know who I'm talking to and background about like them and what brought them into the space that we're working into collectively. For me, it's all about relationships. I want to be working with people that I want to be working with. And I have found that just business and partnerships are better when mission and vision are aligned. And so I usually just like to start my meetings kind of getting some background on people, their investing experience, why they're doing what they're doing. And then it kind of just opens up the conversation to see if there's opportunity for partnership, for collaboration. I like to hear their goals. What are some of your investing goals? What are some of your business goals? Because then that way I can get a better idea of where there is potential for collaboration or alignment. I have calls in the startup space with VCs for Invest Health. And when I tell them my real estate experience, I've had them come in and jump in on my real estate deals. And then I've also had investors who have invested with me in the real estate space who have now found out that I'm building this startup, who want to be more involved in that and are creating different connections and opportunities there. So, yeah, it's a lot of relationship building for me.
Gotcha. And when you have a portfolio, that's a lot easier to do for somebody who's just starting out and wants to get these meetings started, but they don't have the portfolio or the notches in the belt just yet. What advice do you have for the people that are just going out there and trying to get meetings with investors for their first set of deals?
Yeah, get clear on your vision. So, kind of like having that little bit of background of like, this is me, this is who I am, this is what I bring to the table, and this is where I'm going. So, for me, it's different in every conversation. If I'm hopping on a call with a VC for my startup, it's like, hey, here's my story, what I've I've done, everything that I've built with Invest Health. This is what I'm building, or what I've done with Networth Nurse. This is what I'm doing with Invest Health. Is there opportunity for us to partner together? In the real estate space, a little bit different when I'm working with other potential general partnerships to form partnerships for deals. It's like, hey, here's kind of my track record, what I look for in deals, what deals I've done, who I've done business with. This is what we're looking for in the future. And then it opens up the conversation for the other person to share a little bit about their background and what they're looking for in the future. And then it just kind of carries on and progresses if there's alignment.
Gotcha. So what are some of the skills that you see and notice that transfer from nursing to real estate?
Oh, so many, which is great. I swear, nurses make the best investors. And I always preach this to my healthcare professionals because organization and time management is big. In a nursing assignment, you come into the hospital, you get your day, you have 5 patients. One's going for surgery, one's doing this, one has a procedure, one's decompensating. You need to go over there and call the rapid response team. And so you get your schedule for the day and you are prioritizing as the nurse. You're coordinating all their care. You're coordinating case management, physicians, family members, procedures. So nurses do a lot. And I think the time management and organizational skills that they have and the ability to do assessments and research and base their interventions on data. I mean, everything in nursing is research-based, evidence-based, in medicine in general. And so we're doing a lot of our interventions based on the evidence of what we've seen with patients and anatomy and physiology, all that stuff. And so in the investing world, it's comparable in a sense of that you're evaluating these investments, you're assessing them, you're looking all into them, and then you're deciding whether or not you want to move forward with them. And in real estate, value add, different things that you can do to force appreciation and make money. It's fun that there's a sense of creativity in it as well. But I do find that healthcare professionals make great investors.
Absolutely. They're very decisive.
Yes, they have to be.
But no, that's really special in the way that you bring together that community and what you offer them, because it's not just a purely business side of things.
Yeah.
For you're very passionate about helping other people, and like you said, they make a lot of money, but it's not about how much money you make, it's about how much money you keep and save and invest. And you're very passionate about that side of things with all of your nurses, your doctors, and everybody, because it's such an important thing. And like you said, they don't have much experience, or they're fearful of taking a look at their budget and setting one. And so I really commend you for everything that you're doing for them and for that community.
Thank you. Yeah, it's a little more than transactional for us. It had to be to build a business around it. And for me, it's been so cool to see even family members who, when we first started out, were maybe a little apprehensive about what we're doing, saw us take down 3 deals and then jumped in the 4th deal with us. My grandparents did that. And that was so cool to see, of like, okay, cool. We got my father-in-law in deals, nurses I work with, doctors. And it was so cool even being a manager and doing nurse quarterly disbursements. And I'd have some of my techs come by my office and be like, hey, I saw the check in my bank account. Super cool. Like, thanks, and just having those conversations and providing this opportunity to other healthcare professionals it's what it's all about for me.
That's awesome. I would dive into the medical community, but I'm way too squeamish, and that's a lot less of a catchy brand, the squeamish investor. So, but anyway, what are your goals for the year? What are you working on? What are kind of your yearly goals, and then your long-term goals?
Yeah. So like I said, my husband just left his full-time job in February. So continuing to grow and scale our real estate business, especially with him working full-time on it, has been a game changer. Just even being able to alleviate a lot of the stress, being more involved in our daughters' lives. It's crazy to think 3 years ago, we were setting 3-year goals with our real estate investing, and to see that at 3 years, it's like a constant reminder of like, we are living our dream. We're living the goals that we wanted to achieve. And so super cool every day to appreciate and recognize some gratitude there. But continuing to scale the real estate portfolio and the real estate business. Networth Nurse, just continuing to provide a resource and a voice for nurses with financial literacy and financial wellness. And with Invest Health, our startup, the goal is to be the #1 financial wellness platform platform for healthcare professionals. We want any healthcare professionals who are thinking about investing or finances to think of Invest Health. So that's our goal with that business.
I love it. Those are super inspiring.
Yeah.
So
On a
what
mission.
yeah, exactly. So what resources do you use to stay ahead, make sure you're in touch with the markets? Do you have meetings with other mentors, other investors? Do you uh listen to certain news articles, books? What are some of the resources that you use to stay on top of everything?
Yeah, I am so bad about the news. I shun all media from my life, especially after the COVID pandemic. I really kind of refuse to watch any of that. So to stay up to date on market trends and things like that, I'm always on with Bigger Pockets. I stay up on their newsletter. It's really the only like media news updates I'll stay into of kind of like what's going on in the real estate space. Also with Marcus and Millichap, I always make it a point to attend real estate conferences just to hear more about what's going on with the economy and markets and inflation. So that's kind of how I stay educated in that space. In terms of like networks and communities, there are different real estate groups. I have the Facebook group that I maintain and constantly connecting with other individuals there. Continuing to go on podcasts and sharing my story opens up different opportunities for connections with different healthcare professionals as well.
What are some of the advice that you would have for everybody that's looking to either get started or is continuing? What is some of the advice that you have for the listeners?
Make some goals. Goal setting is something that I've done religiously since college, and it has proved so foundational in everything that I've achieved and continue to set my eyes on. But it is not always when you set goals and you have a clear vision of where you want to go, you can create a backwards plan of action steps to get there. And for us, of knowing, okay, when we first sat down with real estate investing in 3 years, we want to have this amount of money coming in every month. What's it going to take to get there? How many deals do we need to get done? How many investor calls do we need to have? How many deals do we need to underwrite in a week? And so looking at your goals and kind of creating an action plan to get there has been big. And then also connecting with other people who are out there doing what you want to do. Your net worth is your network. I have found that to be so true in this real estate space.
100%. So last question, what is your crystal ball for the commercial real estate market? I know you're focused on value add properties and commercial real estate. So what is something that you're anticipating in your underwriting and that you're looking forward to in the market?
Yeah, so June 2023 right now, the last 9 months have been a little slow in real estate, just even with transactions, especially compared to how they were over 2020 and 2021 when we had record low interest rates. But so it has been a little stagnant for sure. We're just starting to see the market correct itself in a sense of sellers are coming down to meet buyers' expectations. And so we've seen a little bit more realistic deals presenting themselves. And then right now with financing terms have dropped a little bit in interest rates. And so looking to capitalize there as well. But just looking to continue to mitigate risk through good underwriting, which involves great market analysis. I mean, you can look at where a market is, where it's been, and where it's going just by digging on the internet. And so we tend to build in our risk mitigation through conservative underwriting and a market analysis.
Gotcha. If you're doing a quick underwriting, you just need a real back of the napkin. Is there a method that you use? Do you use like a 10% economic occupancy and then a 50% OpEx, or do you do anything like that? Or do you just dive straight
No,
into a nitty gritty underwriting?
yeah, yes, because when the broker's getting over a deal, I mean, eyeballing it, but kind of throwing it in the spreadsheet really brings the numbers to life. Once you get
Gotcha.
those good spreadsheets, you can start manipulating different things in them, and you can do a lot with a deal.
Gotcha. Well, that's our time. Savannah, where can everybody find you?
Yeah, I am super active on social media. So Instagram, LinkedIn, Twitter, YouTube, and yes, even TikTok. Networth Nurse is my handle on all of those. Networthnurse.co is my website. And then my startup company is investhealth.com. So if you're interested in chatting about real estate, startup space, any of the above, please reach out. I would love to chat.
Savannah, thank you so much. It was an honor and a pleasure to have such a great investor in person on the show today. Thank you so much for your time.
Thanks, Cory, for having me.
Thanks, guys. This was the latest episode of the Mastering Commercial Real Estate podcast with Savannah Arroyo. Until next time, we'll see you.